Hello, welcome back to my channel, Ravi Money Talks. Okay, first and foremost, I would like to apologize for the lack of uploads for the last couple of weeks. This is due to my computer having some technical difficulties, thus unable to film and upload. So need everyone's understanding on that. Rest assured that it will be up and running soon after we get all the technical difficulties sorted out. Okay, so yeah, let's start with today's video. So as you can see, today's video we are going to talk about the hottest topic that every one of us has been experiencing for the whole half of this year, something that we have never felt such an impact before, which is inflation. Okay, so I think this is a no-brainer issue which affects everyone. Everything has become more expensive. So what has US government do to curb with inflation? As of a couple of days back, I'm sure we have all heard that further 0.75% basis point has been so-called added, making up the interest rate currently to the range of close to 2.5% the US. So that is one way of them coping with inflation. So let me share with you today how the rising interest rates is going to affect you. And of course, what can we do about it? Okay, so let's go. So first and foremost, let's get to the underlying what caused inflation. Okay, in a nutshell, in the most simple to understand manner, inflation is caused by an imbalance between supply and demand. So when supply is limited and is unable to cope with the rising demand, prices will naturally go up. So some of the factors that affects the supply, I'm sure we all know this year there are quite a few economic factors and geopolitical events out there, mainly the war in Europe, the supply chain disruptions, China COVID lockdown policies. All these has caused disruption in supply chain and trading, and of course it's not helped by the price hike in energy. So all these factors has led to prices being aggressively going up and affecting every one of our livelihoods. So when that happens, our food, our groceries, our discretionary, our bills, in fact everything, the cost of living just goes up. So as what I mentioned earlier, one way of coping and handling inflation is to aggressively increase interest rates by the Fed. But of course, it comes with implications and consequences. So what are they? Let's go into it. First and foremost, we need to know the impact of rising interest rates. The first thing that will not be spared, of course, is the housing market, as you all can see. So as the cost of borrowing goes up due to the increase in interest rates, the interest rate of mortgages will go up naturally. So this will lead to less people being able to afford investment property, residential property, ultimately leading to a less demand for homes. So this will eventually lead to a cool down of home prices. If currently you are actually serving a housing loan, with more interest to pay, you will have less disposable income for spending on other things. Am I right to say that? So with that being taken into consideration, when we have less to spend on, the economy will be hurt and affected, definitely. So this is the first impact on the housing market. If you are a business owner, be it a sole proprietor, partner, or even a company director, you are not spared as well. As the cost of borrowing grows up due to the rising interest rate, the cost for taking up business loans also go up. So with that in mind, as you have less money to buy equipment, to expand your business, or even for turnaround for your business, it's not a good thing. This will lead to less money for you to even pay your workers, or even worst case scenario, having them to take a pay cut. So this will lead to a very downward spiral situation where, worst case scenario, workers are being laid off, people salaries are being cut, and eventually people leave. So you can see it's not a good cause and effect thingy that will have due to the rising interest rates environment for business owners. Secondly, if you are a consumer, be it you are an employee, a fresh grad, or even someone who is working, your car loan, your credit card interest rates, your student loans, all these goes up as well. So this will naturally lead to less demand for automobiles, less people wanting to buy car. And I'm not even going into the rising cost of fuel. Okay, for credit cards, people will think twice before spending more on their credit cards because it may lead to them overlooking their bills and incurring late charge, interest charge, all this. So it will also lead to, like I said, same thing, less disposable income for spending. If you are someone who is in a business loan or even a student loan, you are paying more for interest, which will lead to you having less money for other things to spend on. And why do you say that? So ultimately, same thing, it will lead to the economy being affected as there are less people spending. Yeah? So I hope you all can see the so-called linkages on how we piece the information together on how the rising interest rate can affect anyone out there. Stock market are not being spared as well. Think about it. As the interest rate continues to rise to curb with the inflation, some stocks may get affected. One example which I can think of are your growth stocks. So what are growth stocks? Growth stocks, as we all know, are stocks with future potential growth. That means they are able to generate a certain amount of revenue in the next X years, for example. But due to inflation and of course rising interest rates, it will look less attractive to them as a whole because, like I said, the future value which they are going to earn will be lesser than what it is today. For example, yes, we all know time value of money. 10 million today doesn't mean 10 million 5 years later. So even if, for example, this growth stock has a potential to earn 10 million in the next 5 years time, we all will know that this 10 million will not worth 10 million in the next 5 years time because due to time value of money and inflation eroding the value of it. So growth stock will look less attractive to investors, leading to less people investing in them. So I hope you can see how they will be affected by that. So how about your big stocks, like your mega stocks, Amazon, Apple, Microsoft, etc., etc. So based on what I shared earlier, due to the fact that every one of us is actually paying more interest, there will be less money for us to spend on other things. Your discretionary, your items that you need or want to buy, you'll think twice before spending. So all this will lead to a reduction of profits for the companies itself, which of course eventually will lead to their share price being affected. Yeah, so you see, it's a very easy way to piece and link up the information on how you see it. Also, hopefully I can give you a better perspective of how we feel that rising interest rate, how will it impact us. It will. Okay, of course, all is not lost. There are still things that we can do within our control. So what do I mean by that? Yes, we all know interest rate is going up. So what can we do about it? Of course, if you're someone who has short-term debts or short-term loans, if you can, please pay it off. There's no additional benefit for serving these loans at a higher interest that, for essentially no type of return. So if you can, pay off all these short-term loans. Secondly, think twice before spending on items that will require you to serve on a 2-year, 3-year installment plan but with interest. As interest rate, as for now, is on the uptrend, there isn't any benefit for you to take up a installment plan with interest because you'll be paying off interest. And we all know interest is high. So think twice. Next, if you are a home owner with a mortgage loan, if possible, do check with your bank if you are eligible for a refinancing or even repricing. Okay, I'm sure you all can save up a bit instead of serving interest rate that is on the board rate, for example. Okay, besides that, what can we do? Okay, I'm sure on the other side is right now, as we think twice about spending or investing, we have some spare cash lying around. Yeah, so one thing that we can do for now is invest in our Singapore government bonds. I just want to do a disclaimer that I am not promoting any Singapore government bonds. I'm just sharing from a perspective of if you want an instrument that can pay you fixed returns and at a relatively safe manner, then yes, Singapore government bonds is something you can consider. In times like this where even our government needs to pay off higher interest due to the higher interest rate environment, they also need investors to come in to invest. So with that, Singapore saving bonds coupon has been rising. They are offering as high as, if I'm not wrong, close to 3% per annum returns for a 10 years tenure. And it could be something like 2% even as early as from year 1 onwards. So the good thing about these Singapore government bonds are they are highly liquid, as you can sell off as and when you need, and they are backed by the Singapore government. Coupons are fixed, and you can get more info by looking up in the internet, or even if you have not done so, you can actually look through my previous video. I shared a bit on how to invest in Singapore government bonds, so please feel free to check out on that. And guess what? There are definitely better alternatives than holding cash and fixed deposit at this point of time. But of course, do take note that there's always a pros and cons. Also, if you are comparing Singapore government bonds with your investments like mutual funds or stocks and shares, then definitely the real return cannot be compared because they are totally different instruments. I hope that this video has given you a better perspective on how the rising interest rates can impact every one of us and what can we do within our control at this point of time. So this is something that will still be ongoing. There will be 3 more interest rate hikes in the last quarter of the year. So do keep close on how you want to manage your finances, and if you need any form of advice or opinion, feel free to email me. I'll be more than glad to share. And if there's anything that I can be of assistance of, please reach me out. Okay, so with that, I come to the end of my sharing today. I hope it has been insightful. Thank you so much. Please like and subscribe. And if not, I'll see you in the next video. Take care.